Hey YouTube, good morning. I wanted to take a little time today and show you what I've been doing as far as investing the last couple months. Investments that you make really, you see the results and you affirm your thinking in hindsight. So, 5 years from now, you'll know if these were good moves. And the reason it's good to see what someone else is doing that has a longer term horizon is at least it gives you a way to balance what you're doing. If, let's say, you're selling everything that you have somebody that has done this a long time, shows you what they're doing, you can at least see what moves they're doing. Are they selling everything they have? What's their long-term perspective? And get another position on what can be done in this situation. So let's get right into this. So on the real estate side, problem we got is interest rates. Volcker was 1970s person that raised interest rates all the way up to 17%, and right now they're promising a Fed rate of 4% through 2023. Now currently it's 2.25%, and they're promising 4%, and currently commercial rates are 5.5. So that gives you a commercial rate of 7.5. So 7.5% as your base commercial rate basically means property values are now down, even though it hasn't taken effect. So we're going to delete this right here, and we're going to say commercial property values are now down. Now, this has not taken effect, so you may still go out there and find, a 4 or 5% cap rate on commercial properties. But the problem that you have is that interest rate's 7.5. You can buy that property and you'll be losing 3.5 to 2.5% every single year on your ownership of the property as long as rates are this high. And so that statement from the Fed has changed the value of commercial properties, and it has not taken effect yet. So feel free to go out and buy a commercial property for, let's say, $1 million today. Let's say you buy it for $1 million, and this cap rate takes effect. Now maybe your property is worth $800,000. So you have locked in yourself a good 20% loss on that property. And so I looked at an office building, but based on that, I probably won't take action on that unless the property is worth, let's say, 1.2 today, and they're willing to sell it for 600, 700,000, and then I would look at what that takes to do it. So I'm looking at a house today. The house is priced at what market value is. There's no advantage to buying it. There's no shift of, it's just a shift of money from one thing to another one, or tying up some debt if you wanted to take debt out on the purchase. Debt has disadvantage, which interest rate risks, and advantages, which is inflation, right? It gets, it makes you money with inflation. From an investment standpoint, I'm still dollar cost averaging into Walmart stock, coming out of my paycheck. Disney, I sold it, and I got out of Disney. Disney had some good news as far as some of their streaming services and things, and the good news, the stock rose up, and so I got out of Disney, and I will hold this in cash for now. Home Depot, there's an amount of Home Depot I want to own, and through the last downturn, I kind of got to that amount. And so what happened was, I was not upset, but the price went lower than $300 per share. And on that lower price, because I was at my maximum allocation that I wanted to be at, I did not buy. And so I was in a situation where I couldn't buy the investment, and I always say that you should always be in a situation where you could buy more of an investment that you hold. Otherwise, it's not a good investment for you. So I was not. So what I did when Home Depot raised up to about $221 is I sold some. I sold about, we'll say, 2 purchases of it. So let's say I purchase 50 shares at a time. When I'm buying it, I sold, let's say, 100 shares. I don't know what the number was, but I sold some strategically. I sold it at 321, I think. The reason I sold it was in this case, we're in a weird situation because I do not anticipate the markets. I do not bet on market things as a whole. However, we were at a 2.25% interest rate, and the federal government is still doing the wrong things related to that interest rate. And so we're going to have to go higher, and I knew that for probably 100% sure. And based on that, I knew the market expectation would adjust and would have to come down when that was stated. And that was stated last week. And so it went down to 307, and I bought half back in at 307. So whatever the amount of stock, I made $14 because I sold higher and bought lower, right? Is that real? Yes. So I still have, a portion out in case it goes higher or lower. And I can buy. Right now it's at 297. I haven't bought yet. I'll probably buy if it goes down to 270s. And then secondarily, if it goes higher, I can sell some more out. So I want to be at the place that when it's high, as far as what I'm thinking, I can sell some out, and when it's low, I can buy in. But a general portion of it, probably 75% of it, I'm just holding through the whole time. Okay. Crypto, I'm moving out of crypto. And the reason I'm moving out of crypto is the reason I moved in crypto. When the reason that you move into something changes or goes away, that's when you move out. The reason I moved into crypto was to get interest on the crypto, if you remember. Bitcoin was paying interest rates. You can put it on different exchanges and get interest rates. But the situation there with the risk changed once Celsius went bankrupt. And because of that situation changing, it no longer makes you money to put on the exchanges. So I've moved out of BlockFi. My Celsius is obviously dead. I still have some in Nexo that I have to get out. And I have a couple little things going on I can cover later as far as Solana staking and the reasons for that, and also a miner behind me. So, but really not focusing on crypto at this point. I still have these stocks that I'm watching. I think 2 of them went up and 2 of them went down was what happened so far. But I wanted to cover that with you today. What do I think will happen in the market? The market right now is expecting a 4% base rate. Okay? Because that was just announced. We're going to be at 4% through 2023. But you just had a massive expenditure from the government of like $500 billion. And so I think the market is not going to go up. It's going to continue to go down some. And that's at least in the short term. In the longer term, I think it depends on whether our government changes what it does. If it continues to spend like it is, it's going to have to get the money from somewhere. And that money's mostly coming out of the market. So that's what I'm doing. The thing I'm going to be focusing on is trying to get to the place that as houses are dumped, I can acquire those houses. So let's say a house with 250 is on sale for 200 today. I don't care the market direction, I'd buy the house. And so I need to get to the place that when that occurs, I can make sure I can execute with a decent rate. And so I'm not sure, like I can do it on a house today, but I'm not sure when it gets to 7.5%, what that looks like, what makes sense. And so I need to know that ahead of time, and that's kind of what I'm focused on. Hey, have a great day. Like and subscribe or comment on something down below, ask a question, and I'll talk to you later. Bye.